but it has to be the way the policy is designed. So so when you design the policy, there's basically something called the premium, that's the base premium, and the paid up additions rider premium.
Okay.
Most agents don't put any paid up additions rider on a policy, and if they do, it's very little, right? So that's in the design of the policy. And so it's how we design the policy and being able to use the money right away. And all the companies that I work with have been paying dividends for 100 consecutive plus years without fail. Yeah. But it's not just about the dividend, because the policy has a guaranteed growth rate in the policy. You have a guaranteed growth of 4% inside of the policy. That's not me telling you. Policy contract. So before you ever accept your policy, sign it, pay for it, and put it in force, you will see that in the contract. Right. So, now the dividends are above and beyond the 4% guaranteed growth. Okay. And the thing that I show you how to do in my presentation is I show you how you can borrow money at a higher rate than what you're earning and make money all day long.
Yeah. That's the punchline of this whole thing. And I understand, but let's get this before we even get to writing a check. Let's talk about the underwriting process. First off, you still have to qualify for it health-wise. I mean, same underwriting guidelines or?
Yeah, no, you're right. You're gonna have to be healthy. You're gonna have to qualify. I talked to a client earlier today, and they said, "Hey, I want to start this, but I have cancer." Right? No, you're not getting approved. However, it doesn't mean that you can't do it. All you do is you own the policy on someone else that you have a vested interest in, such as a spouse, a child, a grandchild, niece, nephew, or a business interest. Right?
So now we're talking about doing it. Yeah. Okay. I see what you're saying.
Yeah. So it's not a problem if you're not insurable, or even if you're over age 75 and wanting to start. It doesn't work very well for somebody. I mean, even a healthy person that's age 75 or older, it's hard to do these types of policies, but that's okay, because that 75-year-old probably has a child, a grandchild, niece, nephew, or whatever. So just buy the policy, own the policy on them, right? Own the policy on them. Now, again, so they have to agree to it, right? I mean, as long as they're above age and an adult, they have to agree to it. But like if it's your own children and you got minor children, I mean, it's up to you what you do, right?
Right.
Because you're the parent, you're the guardian. But again, right, so that's okay, because see, Charles, there's three things on a policy. There's three things. There's the owner of the policy, the insured individual, and also the beneficiary.
And the fourth one, the premium payer.
The premium payer is normally the owner. Yes.
Right. Yeah.
Okay, you can say that. But the owner, insured, and the beneficiary. Well, the owner controls everything. I always say he or she who has the gold makes the rules, right?
Yeah.
So the owner, the payer, controls everything that's going on in the policy. And the owner decides who the beneficiary is going to be. Now, the owner and the beneficiary can change at any time and multiple times.
Right.
As a matter of fact, I have 19 of these policies. I put about $500,000 a year in my own premium. I buy at least one policy every 12 to 18 months. So if my wife and I die, our children are our beneficiaries. But I tell my kids all the time, if you guys don't act right, and if you don't straighten up, I'll remove your ass from being my beneficiary.
Yeah.
That's how to keep the kids in line.
Oh, wise man.